Hey traders, hey future traders, this is Welchman here with another exciting bootcamp training for this week. Welcome to my bootcamp training class. Today we're going to discuss a couple of tactical maneuvers that can help you in your trading. I'm going to help you decipher the charts. We'll go over some chart information, but before we get started, subscribe to the channel, hit the bell button. That way you get notifications of future videos just like this one. That way you can watch it, rewatch it, share it. We'd be very much appreciative if you do share it. Subscription base subscribers are growing, and I thank you guys for being a subscriber. If you're already a subscriber, thank you for being a subscriber. If you haven't decided to become a subscriber yet, go ahead and hit the subscribe button. That way you could join the community. Looking to get to 1,000 subscribers before the end of the year. So if you have any friends, colleagues, associates that are interested in learning how to trade, tell them to subscribe to the channel. Thank you in advance. Okay, so this is my website. There'll be a link in the description area where you can go directly to this website. There's a lot of great resources on this website. Now, it should take you to metrofxtraders.com if you type it in your browser. If not, just click the link in the description and it'll take you directly to the website. I've been having some issues with the domain company that I'm using, but I'm going to get that sorted out, and hopefully when you type it into your browser, it'll go directly to the site. But if it doesn't, there's a clickable link in the description area. It'll take you directly to the site. So what I'm going to be doing going forward, I'm going to be giving out 3 free lessons to everybody that subscribes to the Academy. So when you come to the site here, okay, I want you to scroll down, join the recommended Academy. Okay, this is going out to the first 4 people that sign up and become part of the Academy. Okay, in the Academy, you're going to learn everything you need to learn to become a profitable Forex trader. There's over 200 videos. There's over 10 instructors. There's live sessions that you can actually look over the instructor's shoulder or via webcam, Zoom, calls, things of that nature, and they'll coach you on what to look for, how to place an entry, how to exit, things of that nature. But if you decide to subscribe to become a student of the Academy, I'm going to give you 3 one-on-one lessons to get you started right. Okay, I'm going to help you open up your demo account. I'm going to recommend what broker you should use. There's 3 on my website. So do your due diligence on which one you want to subscribe to. Okay, so they allow you to trade with paper money, free money. So you can open up a demo account. You're going to need to do that. I'm going to help you do that. Okay, you're going to need TradingView, okay, which is a charting platform down here. I'm going to help you set that up. You're going to need to learn how to read the charts and hold your hand through the whole process to teach you how to read the charts. Okay, and then after the 3rd lesson, if you feel like you want to hire me as your mentor, I'm going to go ahead and leave this discount promotion here. I'm going to change it from September to November, so it'll expire at the end of November. So by the time you come back to this website, it'll be saying November. Okay, you can take $200 off, and you can hire me as your mentor, and that's a lifetime mentorship. Okay, which means no matter how long it takes for you to become profitable, I'm gonna teach you, coach you, motivate you, tell you what books you should read, how to practice, okay, how to backtest, help you create a trading plan. That's crucial, because without a trading plan, you're not going to have a set of rules to go by. So I'm going to help you create those rules with a trading plan. Okay, and what you need to do is just follow your trading plan. It's like a roadmap to your destination, vacation destination. If you follow the roadmap, it'll get you there. So that's what your trading plan is going to be. Okay, so for the first 4 people that are watching this video, if you decide to subscribe to the Academy, reach out to me. I'll get notification that you signed up, but at the same time, send me proof that you signed up, and then you and I will look at the calendar and block out time, okay, to get you started on the right foot, okay, I'm going to help you create, again, your demo account. I'm going to help you understand the charts. I'm going to help you understand candlesticks. I'm going to help you understand patterns. These are the things you're going to need to learn before you can become profitable. So I'm going to hold your hand to the whole process. Okay, so with that being said, if you have any questions about who I am, okay, you can always scroll down and read my bio, okay, or watch this video here. It tells you a little bit more about me. But my bio is also written all the way down. If you scroll all the way down to the bottom of the site, you can read my bio. Okay, you can go to the website, do that. And also, risk disclaimer, please read that. It's very important. It's no guarantee of income, but that's on here as well. Okay, and as a student of mine, you're going to get this candlestick trading Bible, absolutely no cost. So I'll send that to you. We'll be reading that together. Okay, and yeah, and I'll be putting on my training on here once a week, so you can always come back to the website and watch the most recent training that I put on my YouTube channel. I'll be putting it on this page as well, so bookmark this website. Okay, the goal is to help you become profitable. The goal is to help you create a career within this profession. That way you can have an office that doesn't necessarily have to look like this, but if you have a laptop, desktop, or a smartphone, you can start trading in the financial markets. So this is your future. And if this is what you want to do, join the academy, reach out to me, and let's do that one-on-one training session. You get 3 one-on-one training sessions, absolutely no cost. Okay, and if you want more, you just let me know, and we'll work out a deal to help you hire me as your mentor. Alright, with that being said, let's jump into the charts and give you a glimpse of what I'm forecasting for next week. Okay, so I don't know if you guys haven't noticed, gold has been ripping on the higher end, and everybody's excited about gold. Why? Because when there's uncertainty in the world, and I'm talking fundamentally, people rush to gold because it's a safe haven. Alright, you always hear, if you want to save money, you got to have some gold in your portfolio, because gold, alright, when you buy it low and sell it high, you make money. Okay, so don't let this number fool you here. This is just a paper account that I've been trading, and I've grown it from 100,000 to a lot of it's incredible the numbers that it grown to, but this is my prediction for gold for next week. So gold is actually hit an all-time high. Okay, as you can see, 4,059.36. Okay, but it's actually bouncing off the highs. Right, it bounced off the highs twice, so you got a double top. If you don't know what double top is, that's why you need to join the academy. All right, so when you have a double top, usually there's a retracement that occurs after a double top. Okay, it's an indication that the market's going to be shifting. So, excuse me. So when you see that, you just got to prepare for a retracement. A retracement is a pullback. All right, and then when the market gets down to a level, okay, it'll pretty much bounce back. All right, but as you can see here, this pullback hit 0-0, which is a Fibonacci on a Fibonacci. So you go from the top to the bottom, and you look for a retracement of that pullback. Because when looking at the market, you're always going to look left to see if there's any gaps in the market. Because when there's a gap in the market, if we go to the 4-hour, I'll show you exactly what I'm talking about. Okay, let me just erase everything. We'll mark it up together. That way you understand what I'm talking about here. Okay, I can't really take this off because the market's closed. It's rejected. So this is just a paper account, like I said. But yeah, I bought it low, and of course it's going higher, which is why it's in profit. But anyway, all right. So this is a 4-hour, and normally you want to mark your chart up from the top down. I normally teach a top-down analysis, which is you start with the higher highs of the market, which is what we're in right now, which is a 4-hour. Then we work our way down to the lower time frames for entries. Okay, so I'm typically analyzing the chart on the daily and the 4-hour, Okay, and then the 4 hour I jumped down to the 15 minute, the 5 minute for execution, which means that's where I enter the market based on my analysis, right? So if we're looking at the chart here, the very first thing you want to ask yourself is, where's the market at right now? Is the market trending higher? Is the market trending lower? As we can see from the candles here, we notice that the market is trending higher. So we're going to put a trend line beneath the lowest low. Okay, there's a trend line here. I want this one here. Go to the lowest low and you pull it all the way up. That's your trend line. Okay. So I teach buy at the dips, sell at the highs. Okay. So when the market retraced back to this line, that's where you want to place your buys, right? Or higher highs. Okay, because the market is creating higher highs. Okay, so basically we're in an uptrend. Okay, this is all considered an uptrend. All right, so if you take this tool here, you'll notice. Go back down. We started right here. Take this tool. Started here. You got a high, then a low, then a higher high, then a low, then a higher high, then a higher low, higher high, a low, a higher high, and a low. As you can see, there's a retracement happening. Okay, typically when this retracement is lower than the lowest high, okay, there's a retracement. Okay, that means the market has shifted and it's about to trend lower. Okay, so if we go this way, you'll notice that this candle here on, the black candle, if you go left, you stretch out this line here, you notice it's actually below the lowest high, which was on the left side, right? So you can put a line there. Okay, just to give you perspective. So this candle came all the way down and closed below this candle right here. Okay, so we can anticipate a market structure shift. Okay, another word you need to understand. So write that down on your notes. Market structure shift. Because when you see this happening, you have to now prepare yourself to, for a retracement. Even though you see a little, bump up here, okay, but we don't see any higher highs, right? All we saw was a double top, which is where the market actually touched twice. So if we put this triangle here, you can say to ourselves, okay, this was where the double top was. So we'll put a line there. Some of you will call it also resistance, which is a ceiling. Okay, so you got your resistance and you got your support down here as well. Okay, so let's mark that up as well. So we got support down here. Okay, and we got resistance up here. So these are our two markers, right? Now we're gonna go down, and also reading candles. You notice that there's a hammer right here. Okay, and you also notice with this particular candle, right? This is where the Candlestick Bible book comes into play. From reading that book, you'll notice what these candles are telling you. They're forecasting the movement of the market. So you got a hammer here, and then you have this huge black candle, okay, which is bigger than the candle previously, and we call it this candle a bullish engulfing candle. It's bigger than this candle. So what does that tell you? That the very next candle, look for sells. And this is where all the selling happened. Because people, they've had gold lower. So once they hit this high, some people taking profits, right? Who would want to make some money when your investment hit a ceiling or a peak? You start taking profits, right? Start taking profits. So the smart investor takes profits, starts selling off what they have, wait for the bottom of the market to happen, and then buy it again. All right, buy it again. There's some people who make money selling. There's some people who make money buying. Okay, so since we know that there's a market structure shift here, what I would recommend is wait for that market structure shift to happen, okay, and start looking for sells. Okay, start looking for sells. Because if this candle does not surpass this area here, okay, then it's shifted to go lower. Okay, so what we need to pay attention is we'll go down to the lower time frames and see, okay, is there a gap? When the market did that, did the market create a gap going lower? Okay, and the answer to that question is yes. Okay, so if you don't know what a fair value gap is, then you need to do some research, right? You need to, sign up for the academy and start learning these terms that I'm sharing with you on this video. Okay, so you got your fair value gap, right? It's a gap between two wicks and two, candles, right? So let me erase that and show you what I mean. So you see this candle here and this candle here and this black candle in the middle. It created a gap where both of these wicks did not touch. So there's some leftover sell orders up here that the market needs to come back to and fill. Okay, so it happened so quickly, a lot of people weren't able to sell on time. So what the market has to do is come back and fill that gap before it goes back down. Okay, so we're gonna put a marker here as a reminder. Okay, now two things can happen, right? The market could come up, fill the gap. Let me get my other tool here. And you'll know this over time. You're going to be training your eye to know this over time. So the market could come back here and did this, right? It's trying to tell you it's going higher. It's like a little fake out, right? And now it'll probably hit here and come back down, right? Because remember, we had a market structure shift. And whenever you see a market structure shift, it's got to be a lower low for this market to continue to go lower, right? Like that, right? Now, that's one prediction. Now, all we can do is make predictions. There's no guarantee that the market's going to do what I'm going to say. I don't have a crystal ball, and neither does the most profitable trader out there. Okay, you just don't know. All right, you just make predictions because you got a 50-50 chance that the market will go in your direction. So the market could pretty much do this, right, and then go higher, right? You could bypass all of this and go higher, right? And then hit the top of this, bounce off, and trend higher. So that's another prediction. So, but you have to pay attention to what happens inside of this fair value gap. Okay, so the two candles that you need to be really paying attention to inside of the fair value gap is number one, a hammer candle, and a bearish engulfing candle. So if you see those two candles developing inside of the fair value gap and also a doji, the market's telling you it's going to go lower. Okay, so those are three candles I would definitely put in my notes that if it gets to this area where the fair value gap is, and I'm going to mark it out for you. Fair value gap. I should have it as a template, FVG, and we'll put it in inside center. Fair value gap. Okay, so if you see a doji, if you see a hammer, okay, and if you see a bearish engulfing candle, those are the telltale signs that the market's gonna go back down to make a lower high. Okay, lower low, lower high for you right here. So it's surpassed this whole area to trend lower. Okay. Now, we'll go back down. Let me see something. If we go back down to the 4 hour, I'm going to show you something here really quick. Let me erase everything here. Okay. Okay, so when the market did this run here, right, which is bullish run right here, did it create any gaps within this run? The answer is yes, it did. Okay, so if the market created a gap right here, this candle and this candle, right there. All right, and there's a doji right there too. So it's like, get prepared for a reversal. Not going to tell you when the reversal is going to happen, but get ready. It's going to be a reversal, and look at that. It was a reversal. All right, now stretch that out. And what did I say previously? I said previously that the market has to fill that gap. It's got to come back. Okay, before it can make a higher high, it needs to fill that gap. Because why? There are leftover buy orders here. There are people waiting to jump into the market, okay, to ride the market higher. All right. So if you know this, you mark it out and you wait for the market to get to this. What is it called, class? Fair value gap. Exactly. Okay. Now you can back test and look for these fair value gaps and test the market out. Okay. And you'll notice what I'm saying. Like, here's another fair value gap right here between these candles. What happened? The market came back and filled the gap. Here's another fair value gap. What happened? Market came back and filled the gap. So as you can see, I know what I'm talking about. All right, and that's what you should be training your eyes to look for. It's for the market to come back and fill these gaps. Now, is it foolproof? Will the market continue to bounce off these gaps and go higher? No. Sometimes it'll bounce in the gap and go lower and fake you out altogether. That's why you always got to put a stop loss to protect your principal. Do not trade without a stop loss. It's important that you put a stop loss into place. All right, so we're waiting for the market then to come back to this fair value gap, right? So we do that by going to the lower time frames and see what's going on in the market. We notice that there's a chance that the market can go ahead and fill that value gap, and what we do is pull out what we call, let me show you something here. Let me pull out a Fibonacci retracement. Let's just show you something here. This is what we call a fib. We take it from the top to the bottom. Okay, and the market has these levels that it has to hit before it trends lower. So we're waiting for the market to hit 78.60. Okay, so we're going to mark this out right here, this area right here, and we're saying that if the market does not blow past this, and it's going to be trending back down to this fair value gap. So it's two things, 50-50 chance, right? But that's why there's no guarantee. The market can come up here, blow past it and go higher, or come up here, bounce off it and go lower. Okay, so that's one way to look at it. Alright, so if we go down to the lower time frames and see that, hey, that could possibly come true, right? If we stretch this out, as you can see, the market is getting closer to 78.6, but it may reverse on its own before even getting to that level. Okay, because there's another concept you need to understand: liquidity. Where is liquidity sitting? Right here. This is where liquidity is sitting. This is where a lot of orders are sitting as well. Okay, look, so the market has to sweep liquidity. Okay, hit 78.60, possibly bounce off to go down to fill that fair value gap. So you got liquidities resting right there, and you got your fib levels right there. Okay, now let me show you something. Now, if you go back to the 4-hour and you say to yourself, okay, let me use this other tool. There's another fib, trend-based fib extension. So if we know the market needs to come up in these levels, and we go to the top and we stretch this out to the bottom, and we go to our fib level, which is right here, what do we notice? That the levels for the retracement is right really close between this number here, 1.618, and then you got your 1. Look, it's right in the middle of it, where your fair value gap is. Alright, so this little tool is helping you with your analysis. Okay, because once you have something falling between these two lines, and what falls in between it, a fair value gap, there's a good possibility that the market will potentially come back into the zone, bounce off it, and make a higher high. It's a possibility, but we don't know. Don't have a future ball. The market may do something totally different. It may range, it may go sideways before it does anything. Okay, and it tends to do what it want to do. All right, because the market makers, who are the ones who are, accepting orders, selling orders, buying orders, they're the ones who pretty much set the pace of the market, and their job is to make commissions, right? So the more commissions they can accumulate, because they have goals throughout their day, and that's when the market, you have your institutional, institutions trading, you got your banks trading, and you have us, retail traders. What we want to do is follow in the trend, right, and place buy orders, because we're in a trending market and it's very bullish, and we know that with what's going on in the world, the uncertainty of the world is really unstable. Things are popping off everywhere. Wars are happening, rumors of wars are happening, and people are just out of their minds. And what do people do? They run to gold, because if their bank closes and their money is gone, what do they fall back to? Gold, 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 gold. So that's why gold is right now ripping and making these higher highs. Because a couple of years ago, gold wasn't moving as much because the market was stable. But the market right now is unstable. Okay, a lot of craziness going on. But within every tragedy, within every craziness, there's a movement in something. And gold goes to show you that, hey, buy it and hold it, great things can hold. Great things can happen. This is a buy and hold type of strategy. Okay, because some people think they could day trade gold. Well, yeah, you could do that. Scalp gold, yeah, you can do that. Or you can swing trade gold. You buy low, hold it for higher levels. Now, we don't know how high gold's going to go, right? We don't know. Will it hit 4,500? We don't know. Will it hit 5,000? We don't know. All we could do is just hope for the best, right? All right, so that's my analysis on gold. And then when the market actually gets closer to this fair value gap, you're going to drop down to the 15 minute, okay, or the 5 minute. And when it's in this area, what are you looking for? Okay, class, there's a quiz for you. What are you looking for if the market comes down to the fair value gap area? I think I heard somebody say, I'm looking for a doji, which is a reversal candle, or a bullish engulfing candle, okay, and an inverted hammer. Alright, so those are the three candles. If you see those three candles develop in that area right here, prepare yourself for a buy. Okay, prepare yourself for a buy. Okay, and then you put your stop loss below, and you aim for the higher high. Okay, you aim for the higher high, which is pretty much back up to these levels. Because if the market comes back down and fills the fair value gap, it's only looking to do one thing, and that's to create higher highs. And if it does, and if you set your target up here, so I'm going to show you something here. If the market, we'll do a long position, comes down here, okay, you set your stop loss below, he stretches all the way up to the higher high, the most recent area here, and you're looking for a 1 to 5 ratio, 5.53 right there. Okay, so with a pending order, right, if the market came down, went into the fair value gap, you'd be into the market because of your pending order, and you ride it all the way back up. Okay, some of you will say, wow, I just made some profit, right? Or some of you will take partials and sell half, right? But there's no guarantee. There's no guarantee, because the market could do whatever it wants. It could go through the fair value gap, hit your stop loss. That's why you set your stop loss below, and do something totally different than what I'm predicting right now. But I would love to see it happen this way, because that would be great things for not only me, but everybody that, you know, is under my tutelage. So hopefully we could, you know, anticipate great things to happen within gold. So that's what I would be looking for in gold going forward. So, you know, but again, like I said, there's no guarantee. Now that's gold. Now, hopefully you got a lot of value out of that. We'll do one more pair. Let me see. Do I have Bitcoin on here? You know, I got crazy numbers of Bitcoin as well. Let's do this. That's crypto. Let's analyze GBP USD or EU USD. Let's do a quick analysis on this. And this is what you should be doing on the weekends. You should be doing this on the weekends. So I made some predictions. As you can see, it didn't go the way I wanted it to go. Although it did, and it started to go down with these, you know, my finger going down here, pointing downward. But then what did it happen? It retraced and went back up. But let's reanalyze this. Let's create a new board here. Erase everything. And let's see what's going on. We're going to go back to the 4 hour. Let's see what's going on with this market. So I'm going to just show you what I do when I analyze the charts here. So already, wow, I see that we had a trending market. Oh wow. Hold on. Take a bird's eye view of what's going on. So we take our arrow, this one, we start from the bottom, pull it all the way to the top. Okay, so you want at least 1, 2, 3 points, right? Touch it 3 times. Okay, so that's how you want to set your trend line. Because right after that, you can see it didn't make any higher highs. Right, didn't make any higher highs. Put a line on top here, horizontal line. You can see that this was a key area here. So this is where the market retraced back down. Okay, trying to fake people out thinking it's going to go lower, right? Because right here is where the market, let's put another line here, bounced off of. This is another key area, bounced off that area, then trended higher. So we could put another line, trend line, right here. Touches off that trend line. Okay, or you can do this. Parallel to everything. Alright, make it parallel to this line here. As you can see, the market trended higher, then it consolidated right here, sideways, right here. That's where we put your consolidated box, because it's ranging right there, right? It didn't make any higher highs, it didn't make any lower lows. It just stayed in that box. We call that ranging market. Okay, so we'll thicken this line up a little bit here. Alright. Okay, and then it jumped out of the box. We came back in the box, jumped out right there. That's where it jumped out of. Right there, as you can see. It jumped out right there. And what did I say? Look, this is a bullish engulfing candle, which is bigger than the candle before it. Alright. So it jumped out of the box, hit the trend line, never went above it, it bounced off. Okay. Alright, bounced off. And it's pretty much trending. It's right back in the box. We stretch this out, we're right back in the box. Okay, so what do we see? Well, patterns, you also got to learn patterns, right? I see there's a head and shoulders pattern right here. Alright, let's mark that out. And again, you'll learn this in the academy, exactly what I'm talking about here. You have a left shoulder, got the head, and you got your right shoulder right there. That's your head and shoulders, which is a reversal pattern, okay? Because right when it came back in this area, which is the left shoulder area, it bounced off the left shoulder, okay, and continue its journey downward. So that's a reversal indication right there, indicator. Head and shoulders are reversal indicators. So when you see head and shoulders, anticipate a reversal, which it did. It came down, reversed right there. Okay, but we're still in this range, which is interesting. So I don't typically trade ranges because you get stuck in here. It's like really hard to get out of. Not unless you're able to sell at the top, buy at the bottom. So if you're good at that, then you could definitely place a trade inside of a range. All right. So my anticipation on this, though, is that since it's trending lower, let me put a ray right here. Since it's trending lower, we got a couple of touches here. Let me see. Right, this is where the trend line will go. But as you can see, the candle outside of this trend line is above it. So, two things can happen. Okay, because right here is where this is where our resistance level is. Where resistance is above, and our support is down here. Okay. Alright, so, but is there any gaps? Right? Is there any gaps? This is where you find your gaps. That's where you ask your question. In a 4-hour time frame, where is the gap? Where is this candle going to? Why is it above the trend line? And where is it heading towards? It's heading towards a gap. Alright, so we have to find a gap. Is there a gap within this trend here? And yes, there is. Let me mark it out for you. There's a gap right here. Here is the gap. Okay. Now, as we can see, it did come back and touch the gap. It's inside the gap a little bit right here. Okay. But it didn't fully engulf the gap. Again, we're going to mark this out as a fair value gap. Text. Fair value gap. Okay, so it might want to retouch the gap. Okay, and then do one of these numbers. It's right here, right? So it's going to start here, came up, touched the trend line. We're going to go back and touch the gap to come back down to make a lower low, right? To make a lower low. Okay, and then there'll be a gap between all this here. Then it'll go back up to this gap and then go lower. That's one prediction, right? Because we're outside of the box, right? The range. So we call this, whenever you see this, as a breakout of the box. But it's going back in to fill up the orders that it didn't fill. Coming back down to make a lower high. Okay, if it does that, then the market is trending lower. Then you got a market structure shift, right? Okay, so that's one prediction. So let's erase this. The other prediction would be markets here. It breaks past the gap, right? hits the gap and then trends higher. That's another prediction. And like I said, it's 50-50. You don't know what the market's going to do. But at least you have an idea of what to look for. Because inside of the gap, what are you looking for, class? Again, you're looking for a doji, you're looking for a hammer, and you're looking for a bearish engulfing for a down, continuation of the downward trend. If you see anything other than that, and you see a bullish engulfing candle, it's going to trend higher. Okay? That's why it's important that you build the Candlestick Bible book. Alright, so that's my prediction for EU USD. Alright, so I'll go back to my previous prediction, because I'm in favor of this. If the market does this, right? If the market does this, we take out our short tool, we place a limit order there, we put our stop loss there, we stretch this back down to our area of interest, which is a low, and you're looking at a 1 to 2.6 ratio if the market does this. Okay. Alright, so alright, and then again you'll drop down to the 15-minute. You'll drop down to the 15-minute, and you wait for the market to get closer to the fair value gap. And once you see those three candles, doji, hammer, and or a bearish engulfing candle, that's when I would anticipate. That's when I would put in a sell order. For me, anyway. You guys can do whatever you want, but that's what I would do. Like I said, there's no guarantee of income. There's no guarantee that you have a winning trade. Can't guarantee that. That's why I have a risk disclaimer. Don't put money in there that you're going to be paying your rent with. Don't trade your real money. Trade the demo money, paper money. Practice with that first before you come. That way you're building up the skill set. Once you build that skill set, no one can take it away from you. You can write your pretty much make as much or as little money as you want. If you need to pay the rent, you go to the market, pay your rent. Okay, pull the money out of the market. There's a lot of money in the market. It's $1 billion industry. A lot of money you can pull out of the market. You can change your lifestyle. You can get out of debt. You can pay for school fees for the loved ones. You can retire a loved one. You can retire an elderly loved one. There's money in the market. You just need to learn how to read the charts like I've learned. It took me a long time to get to where I'm at, where I'm able to now share, teach, encourage other future traders to take this not only seriously, but to take a look at the market to write their own paycheck. Okay, gone are the days where you have to wait a whole year for a raise. You come into the market, give yourself a raise. Whether it's a daily raise, weekly raise, monthly raise, it's here for you. You just gotta plot out a strategy and write down your trading plan and execute your trading plan. Follow it, follow it, follow it. Okay. All right. So with that being said, I'm actually right now in 3 funded challenges, which I'm really excited to announce. I'm in 3 funded challenges. Each challenge is $15,000 each, which is a challenge whereby, and if you guys don't know what challenges are, funded challenges are companies out there, funded companies, who are willing to split the profits with you. They're looking for traders who are profitable, who are able to, increase set amount, which is 15,000, and you grow the amount to a number, and once you hit the payout threshold, it's a 60-40 split. Okay, the company that I use for that, I'll go back to my website. That way you guys could take a look to see if you want to do the same thing after you build up your skill set. And it's under funded challenges. It says 3 of them here. I'll just show you which one I'm using. Okay, so if you click on funded challenge number 2, it'll take you to this website here, which is for traders. And typically they have a lot of great deals on for traders. Disclaimer, if you decide to start up a challenge, you'll be going to my referral link, and as a referral of this platform, I do get a commission when you actually sign up for a challenge. So just wanted to let you know that. Full disclaimer. Being transparent with you guys. So I mean, you'll notice that they have different accounts that you could test. Like they got 1,000 3K challenges for just $9.99. For me, I wouldn't recommend this at all because the drawdown limit is really low, and if you're not really good at minimizing or managing risk, I would stay away from this because you could blow the account really quick. But if you want to get your feet wet, it's $9.99. Whereby if you feel that you can pass the challenge, then they'll give you the $3,000 account, and then they'll split the profits with you if you could grow that account to higher and higher amounts. So this is the company I use. I got their which is really, I love this company because one of the reasons why I'm an advocate of this company is that they have challenges where if you want to, you got your one phase challenge where you have to prove yourself and pass the challenge with one phase, which means you got to grow it to a certain amount. Once you hit that phase, they give you the actual real account. There's a 2-step challenge, as you can see here: 1-step, 2-step, 3-step challenges, Instant Master and Instant Master Pro. I like the Instant Master Pro challenge because you don't have to worry about a 1-step or 2-step. You go directly into a funded challenge. I bought 3 funded challenges here, right here, which basically, and this is good for people that don't have a lot of money, right? And you just want to just grow a funded challenge, and they profit split it with you. Let me erase this here, and I'll just break it down for you really quick. They have a great AI coach that'll break down your trades, tell you where your weaknesses are and what your strengths are, and it comes with every challenge. Maximum drawdown 6%. If you lose 6% of the account, the challenge is over. It's done. You breach the account, and then you got to start over. Okay. Drawdown. There's no drawdown limits, which is nice. That way you could trade your plan. Excuse me. Plan your trade based on your rules. Okay. Because the other funded challenges, 1-step and 2-step, there are rules. If you go below those rules, you breach the account. Okay. This is why I like this company, because other companies have those rules, but this company gives you the option to go directly to a funded challenge, and then try to grow the account. Now the profit target is no profit target. Okay, as much as you make, it'll be a split. Okay, profit splits up to 90%. They'll first start you off with 60%, 60-40, where you'll keep 60%, and then they make 40%. And then as you grow the account, they'll increase the profit split to up to 90% with you. Okay. Okay, and consistency levels and no consistency levels. Okay, rewards, you get paid out bi-weekly, so which is every other week. All right, you get paid twice a month, which is really nice. Okay, that could be extra income over and above your current income that you're making now. For me, it's my full-time income because I'm a full-time trader. And then this is the cost, which is nice, and they'll give you like a 15% discount. That way you can save some money. Okay, which is an investment in yourself, right? All right, because if you could grow your account to $15,000, that's my goal. I have 3 accounts. My goal is to grow each account to $15,000, and then there's a 60-40 split. Okay, and then hey, grow that account to higher and higher and higher amounts. That's a strategy that I'm using for myself, and so far I'm profit on 2 of the accounts except for one. I'm in profit, but I got it up to $500, then it dipped down to $200. So I'm still above 15,000. So I have to recover for myself, which is nice, because the threshold to actually request a payout, you got to make over $450, and then you can request a payout. And rule of thumb: do not request a payout unless it's a significant amount, because you have to make at least $80 before you actually, your wallet has to have $80 in it before you can request a withdrawal. Okay, I just learned that myself because I got my first payout, and then when I went to go cash out, it wasn't at $80, so I had to keep the money in the wallet, and then once the money gets above $80, I could request withdrawal. Okay, because I had passed a 3K account while I was actually like 6K. Was it 3K? The 3K challenge. Yeah, I passed it, and then I made some money, and I was like, you know, let me transfer that money over to the wallet, see if I can pull it out. But the threshold's $80. Okay. But yeah, this is it. You know, sooner or later I'll be going on to this level here, but I want to make enough money here, then go ahead and start purchasing this, because you know, if you get 4 of these, okay, you'll have $100,000 that you're trading with. You have $100,000, right? And then 60-40 split, kind of nice. It adds up over time. Okay, and yeah, and then you got your leverage. Okay, you just read all of this information, tell you exactly what you need to avoid to not breach the account. If you're new, you'll get 20% off. Okay, and you get all these tools. You can trade with MetaTrader 5, Trade Locker, C-Trader. So this is global. So depending where you're at, you can use those platforms to execute your trades on. This is some stories about the company and the payouts that they paid out to successful traders and their stories. You can come here and read up on that. Okay, and then this will be your dashboard. It'll tell you how you're doing, where your weaknesses are, how much money you've earned so far. Okay, and yeah, everything's here. So you can listen to these testimonials if you like. Okay. So yeah, just come to the site and just explore, okay? Because this is the goal. The goal is to get you to this part in your trading career where you're actually trading other people's money and sharing the profits with them, because you're now a profitable trader. So if that's what you want to do, again, join the academy. For the first 4 people who join the academy, I'm giving you 3 free lessons. Then after that, if you want to hire me as your mentor, I'm giving you a discount, okay? And then you start taking challenges. Alright, and then we'll jump in. You can take a Forex challenge, a crypto challenge, or a futures challenge. Okay, and I'll be doing the training on futures as well. I starting getting my toe wet, my foot wet in futures trading. I have 1 challenge account with another company that I'm trading futures with, so I'll let you guys know how I'm doing with that. But yeah, this is my career. This is my future. And if you want to be part of it, join my community. All right. With that being said, thanks so much, everyone, for watching the video. Thank you so much. If you got comments or questions, put it in the description area. Reach out to you with an answer. And if you got, you know, like I said, join the academy. It's the first thing you want to do is click here, join the recommended Forex Academy. Link is in the description. Okay, and then once you do that, reach out to me, and then I'll give you 3 free lessons, and then we'll talk on whether or not you want to hire me for a lifetime fee, one-time lifetime fee, and then we'll take it from there. All right, y'all. Thanks so much for watching. Like, share, and comment, and I'll see you next Saturday.